So we met with Senator Blackburn, Senator Lummis, Moreno, Tim Scott, and Haggerty, who recently introduced the Genius Bill. And first of all, it was great to see their level of education and knowledge. Being able to keep crypto and being the dominant player globally in crypto could mean the entire difference between being the United States or being just another country, who then become targeted by the IRS and end up having to pay hundreds of thousands of dollars, unfortunately. And we've also represented clients in SEC investigations. In fact, I was the lead defense counsel for John McAfee in his case as well. How that penalty was assessed and the type. What we see very commonly with crypto is that if you're not reporting fully, or in the eyes of the IRS, they think you're missing something, they're going to assess an accuracy or a fraud penalty. And this could be 25 or 75%.
All right, everybody. So with the recent advancements and what's going on in Congress, and obviously how there's been a major shift in the current administration, there's a lot of things that are going on behind the scenes that I think we should all be aware of. And because of that, I invited my friend Andrew Gordon to come on just to talk about what is going on behind the scenes, talk about some federal actions, and then we're going to get into like the nuance as far as like why does there have to actually be a tax reform, what is going on in the background, and then of course the last one we'll talk about is the country that's going to embrace crypto first and why that's so important. So Andrew, welcome back to the show.
Well, thank you very much, Rob. I'm excited to be here and talk about the very exciting time that we have in crypto.
Yeah, that's it. Because, okay, so first of all, before we get into who is Andrew Gordon, me and you have been in crypto for quite some time. I think you've been in crypto even longer than I have. I got in 2017. When did you get in?
So I first personally got in around 2013, but as a firm, our first client paid us in crypto in 2014. Now, of course, had I held on to all of that, we probably wouldn't be having this conversation. I'd be on an island somewhere, but we were first paid in crypto about 10 years ago and have been active in crypto ever since.
Yeah, that is great. Yes, same thing here. But I will push back a little bit. I bet even if you made all those funds, you would still be out there helping people, because that's what gives us purpose, I think. So real quick, Andrew, just tell us about yourself, and we'll go on to the next stuff.
Yeah. So I'm an attorney, also a CPA, but I've over the last 10, 12 years used these powers for good to help the crypto industry. And specifically, my clients over the years have had tax issues, SEC issues, FinCEN issues, you name it. And we've seen the difficulties of operating a crypto business in the US. But very fortunately, and why we're here today, is talk about how things have shifted. And now there's a lot more focus on keeping crypto within the US, making the US the crypto capital of the world. But over the last 10 years, as an attorney and CPA, I've helped clients fight against regulation in areas like audits. We've seen time and time again crypto investors who are just trying to do the right thing, report crypto on their taxes, be compliant, who then become targeted by the IRS and end up having to pay hundreds of thousands of dollars, unfortunately. And we've also represented clients in SEC investigations. In fact, I was the lead defense counsel for John McAfee in his case as well. So those are the types of experiences that I've had, and I look forward to sharing more about them.
Yeah, excellent. Before we get into the next piece, we're going to talk about that roundtable discussion you had with the 5 different senators. Everybody who, if you are watching this video right now, as far as the recording goes, there's a link in the description, and you can find out everything that you could about Andrew and what he's trying to do as far as the future of crypto taxation and just how he kind of sees things going out. And there's some really good points here. And maybe we can go over this at some point, but exemptions for small transactions, cost basis calculations, simplified, no tax on stable to stable trades. And there was one more here, crypto amnesty program. I like all these things. And again, there'll be a link in the description. Andrew, actually, before we go on, to just talk to this about this site that you guys put together.
Yeah, so crypto taxes, look, I get it. It's not the most sexy topic. And when you talk about crypto regulation, it's usually an area that doesn't get a lot of attention. But the reality is taxes touch everyone who is involved in crypto. If you are an investor, if you're simply buying and selling crypto, taxes are important to you. And whether or not that tax rate is 0, 30, or 50% impacts profits, gains, and losses immensely. People are often trying to chase profits, but your tax rate greatly impacts what ends up in your pocket. But furthermore, in order to keep crypto businesses in the US, in order to keep crypto investment in the US, the tax system needs to be changed. It is something that I see every single day where people try to report, they can't. The tools make it nearly impossible to do so effectively. And so it needs to be changed. There are a lot of ways that it can be changed, and we've outlined them on the website. And now's the time to do so.
Perfect. So that would lead me to the next question, which is this. You sat down with 5 sitting senators, and you guys had a roundtable discussion. Just talk to us about what went on in that discussion, because I know that right now DC is talking a lot about crypto, but what are they specifically talking about, and what was your experience with that?
Yeah, well, first of all, a monumental event to have 5 sitting senators in a small room discussion with myself, about 30, 35 others, people that are crypto Main Street, not the Wall Street, not the large industrial crypto companies, but the developers, the investors, the people that had their own struggles. And these senators took their time to sit down, learn, discuss the issues, but also share about what's going on behind the scenes, what's actually happening in DC. And one of the first things, and so we met with Senator Blackburn, Senator Lummis, Moreno, Tim Scott, and Haggerty, who recently introduced the Genius Bill. And first of all, it was great to see their level of education and knowledge about crypto. While there are many people in Congress and in government that simply don't understand crypto, these are a group of people who not only understood the basics, but wanted to learn more and were enthusiastic about the future of crypto in the United States and fixing the problems that have been so rampant in crypto regulation. For example, Tim Scott, we spoke at length with him about the need to fix the banking industry. One of our clients, a very successful businessman who runs an infrastructure service provider for nodes, and in fact, even helped some very prominent coins be launched that were politically oriented, and I won't name the names of those tokens, but nevertheless, he was debanked. His bank, top bank, and this wasn't something that happened in 2022 or 23. This just happened in 2025. And so we spoke with Tim Scott about the need to fix that, and Congress has had conversations about that with different members of the public as well as banking. And so we're starting to see some momentum in that banking institutions, including some recent legislation SEC guidance that's being introduced. Banking is now being much more friendly to crypto. And this is something that we're seeing happening very recently. So that's one of the topics that we had talked about. Another one is stable coins. Senator Haggerty and the introduction of the Genius Bill. And there's already a lot of momentum behind that. And DC views stable coins as a way to start to introduce crypto to government, get government comfortable with crypto and regulation. And then from there, from our discussion, it seems that the next step will be market regulation. SEC securities regulations, trying to make sure that crypto businesses know how to operate within bounds in the US without being the target of enforcement. And that's exactly what we've all sought in the crypto industry for so long, right? Just tell us how to do it, how to launch a crypto project, how to run a crypto business legally, and then we can do it. As an attorney, we can advise on those things if we know the rules. But the problem is that for the last decade, we don't know what those rules are.
Yeah, that is a huge problem. And that's part of the reason why under the prior administration, there were so many issues. Now that we have a new administration in and we have other people that are coming into those positions, I think it'll be a smoother process, but we still have really an uphill battle. And then just real quick to talk about stablecoins, we talked about that a lot on this channel, which I get it. People say, just like taxes, stablecoins are really that sexy. I get it. And, there's really not much there. But as a reminder, everybody, stablecoins, I think, are going to be, that is the killer use case for crypto and digital assets. This is from, we talked about this many times, this is from ARK Investment. And you can see from 2019, 2024, the amount of, as far as transactional value that has gone up from Visa, MasterCard, American Express to stablecoins. Just last year, it has dwarfed Visa, MasterCard, and American Express. Now, not put together. I think this will be the big year for the breakout, because not only is the current administration pushing it, but individual congressmen and women and senators are doing the same thing. And I think, again, that's the big killer use case. And of course, the last thing I'll say about stablecoins is it's not so much the stablecoins, it is the blockchain it is built on. So all you have to do is just take a look at Tether and USDC, which is 91% of the total market for stables, and just take a look at what chains are actually built upon them, and you kind of figure out from there maybe where you might want to take a big hard look as far as investments. So Andrew, thanks for that little insight. It's interesting to know that the senators are pushing so much for stablecoins, and it makes a lot of sense. But that would lead us to the next one, which is the different federal actions that are happening. And because of that, when we talk about federal actions, we can see that there was what some might say is a nothing burger, but I think it was big, Strategic Bitcoin Reserve. We've also talked about Paul Atkins as the SEC chair coming in, and then, of course, the Genius Act. But the federal actions that are currently happening, what can you talk to us about as far as that, and what was your insight there?
Yeah. So, first, another big event, SEC Chair Paul Atkins replacing Gary Gensler, another campaign promise from President Trump, spoke about it at the Bitcoin conference. Right, President Trump at the Bitcoin conference had spoke about many different changes that he was going to make as the first pro-Bitcoin, pro-crypto president, and putting it in place at the SEC, a pro-crypto person, is an incredibly important event, and hopefully will indicate a change in tune across the SEC and across government, which we're seeing. Another big change at the SEC was putting Hester Pierce in charge of the Digital Assets Committee of the SEC. Hester Pierce has a long time been an advocate of cryptocurrency. I had the pleasure of meeting with her last year as well, speaking with her before the election. We spoke about what the future may look like once there was a change of the guard. So happens to be that we're there, and now she is leading the charge. And so one of the things that we've started to even see is a decrease, or in fact, a moratorium on enforcement. The SEC no longer civilly or criminally from the DOJ going after crypto projects. DOJ even just very recently issuing an internal memo, basically standing down on crypto enforcement. And so this at a federal level, incredibly important, just a complete change from the weaponization, the war on crypto that we had seen for several years before. And so even before we start to think about the positive things, we have to stop the war. We had to stop the weaponization of regulation. And it seems that that's occurred. And so the next step, regulation going forward. We talked a little bit about the Genius Bill, which Senator Hagerty introduced, and there's related bills going through the House as well. The Genius Bill is a very common sense, logical approach to stablecoin regulation. It creates a framework to creating stablecoins and regulating them, something that we've all wanted. And so there seems to be a lot of support behind the Genius Bill, and we'll see how that unfolds. So everyone watching, definitely it's something to be in touch with your local congressperson about, is the stablecoin bill. But even just taking a step beyond that, one of the other things we've seen in the last year is there has been pro-crypto regulation that has been passed. The DeFi broker regulations were repealed. And this was a very simple but very important thing that occurred. And we'll talk more about taxes and regulation there. But at the end of the Biden administration, the Treasury introduced new rules that would require DeFi platforms, exchanges, platforms in general to have very onerous tax reporting requirements, basically require anyone using the platform to complete KYC and issue tax forms. I mean, this is insane. If you want to keep investors in the US, you want to keep businesses in the US, this is the absolute way to force them out. And what we heard from many people as soon as this regulation was implemented or passed was that they're going to leave the US or restrict US people. So very fortunately, that was something that also recently was repealed. And it's a step in the right direction. There's still more to go on the tax front, but that was a big step in the right direction.
Yeah, these are, you know what, just talking about this is what we talk about on the channel sometimes, is that you talking about all these different things that are leading to a stable foundation. I think that was one of the big problems as we started to like blast off to the moon, right? Everybody says one moon, one moon. Well, you can only go so far, you can only go so high as the stability or the stableness that you launch from is actually intact. Unfortunately, when we have launched and gone so high, 2021, 2017, fill in the blank, 2024, and 2025 right now, the problem is that there weren't the laws and the places in place. And some people will say, well, Rob, we don't need any kind of government interference whatsoever because crypto will be great without it. And that is true. Crypto and digital assets will be great. Bitcoin will be great. Bitcoin is great. The problem is, or the thing that I always say is, it's a lot better to get where you're going when you have some tailwinds as opposed to headwinds. And right now, the administration, all the things that are being put together, there is a boatload, in the pun, for tailwinds pushing us in the right direction. So the next blast off I see, we can actually go a heck of a lot further because we have a stable base, because we have the legislation in place, because we have the laws and regulations, and we can actually get there. So that's how I see it. But that would pretty much bring us through our next, one of our next to last points or questions. Tax reform. Do we really need this? Because it wasn't too bad. It wasn't too awful. It looks like you just talked about that, there's been some small changes. Maybe that's good enough. Do we need any more crypto tax reform? And then what does that look like? And why? This is the big question. Why is that so important? Why is that so important?
Yeah, Rob, it's crucial to have crypto tax reform in order to keep or to have the U.S. be the crypto capital of the world. First of all, the crypto tax system is broken in the U.S. It's the IRS barely understands it. I see it every day. Our clients get audited by the IRS. You ask the IRS, why is this being taxed this way? Where's the regulation that supports this? They can't point to it. They don't know. Yet at the same time, they're penalizing our clients. They're assessing fraud penalties, criminally investigating our clients. It is broken. Those people who want to do things properly will have to do it on their own. The exchanges don't issue tax forms for you. And we'll talk about how that's going to be changing. But historically, they haven't. And all of them won't be in the future. And so it's on each person to report on their own. And if they don't do it correctly, penalties, audits, investigations. Yet the IRS wants to collect tax dollars, and crypto investors want to pay what they rightfully owe. I hear it all the time, right? Capital gains rates, not that bad. Long-term capital gains rates, 15%, high 20%, not that bad, truthfully, right? We want to pay what we owe, but it's nearly impossible to calculate it, and we don't know the rules. Our swapping from one token to one protocol to another, is that a taxable event? Is staking and unstaking a taxable event, right? These concepts, if I even brought them up to members of government often, or the IRS, they won't even know what we're talking about, yet we're expected to pay taxes on it. So the first thing that we have to fix is clear regulations. Just like we talked about securities, right? We need to know what's inbounds, what's out of bounds, how are you taxed, what's taxable, what's not. These things need to be addressed. These aren't difficult concepts, but we need clear regulations. And so that's one of the first things. But this is crucial. It's vitally important because everyone who interacts with crypto has to pay taxes. It's not something that just impacts, for example, securities laws that only impacts those that want to create crypto tokens or invest in ICOs, right? Taxes impact everyone. And to have the U.S. have an advantage over other countries, to have your crypto business be in the U.S., to have a staking business be in the U.S., taxes need to be fixed. Otherwise, they're going to go to China, they're going to go to other countries, and we've seen it for years.
Yeah. You know what? Well, real quick follow-up question. For your clients that actually happen to, where they do the due diligence, they try to play by the rules, although they have to put it together like tic-tac-toe, and they actually have some information, and then they get a fine. How do you guys deal with that? Because I've had some other people in the past say, hey, I've tried pretty hard. I just don't want to get fined because I'm trying to do the right thing, but I'm scared because if I don't do the right thing, then I get fined, I get some kind of levies. And so how do you guys deal with that?
So it depends on how that penalty was assessed and the type. What we see
Okay.
very commonly with crypto is that if you're not reporting fully, or in the eyes of the IRS, they think you're missing something, they're going to assess an accuracy or a fraud penalty. And this could be 25 or 75%. And what we've seen is that often people will still have a good faith attempt, will do their best and still get hit with these fraud penalties. We've had successes, especially recently, with appealing these penalties. May even have to take some of these to tax court. So we have had victories, but we shouldn't have to get there. It is a waste of resources from the IRS to have to fight us and lose. I mean, we're going to beat them, right? But for them to put up the resources, that's not what they should be fighting. They shouldn't be going against the crypto investor who tried to report that the rules weren't in place. They didn't have the tools. That's not where they should be putting their time and resources. And so it needs to be fixed.
Yeah, okay. It definitely needs to be fixed. And I do like that last statement. Like, hey, if you want to go against us, you're going to lose, but go for it. So Andrew, this will be the last question. I know your time is precious, but you did mention about the United States and crypto tax or crypto companies and projects staying in the United States as opposed to going offshore, which we've seen because they have to, because there's no clear regulations. And then you talked about China picking up the slack and allowing people to come into, or different countries around the way. The question I have for you is a broad question. The country that embraces crypto first, I mean, really embraces it. And of course, El Salvador has been on the forefront. They've definitely embraced it. We have Argentina coming in, doing the best that they can do. But the one major country that embraces crypto, what does that mean for them in the future?
I think it means the difference between being one of the most dominant countries economically or not. And we see this generationally. We see it periodically, where changes in technology and those that adopt it and promote it are in the front, right? Silicon Valley is in the United States. And wherever the future of crypto is, and it's likely going to be decentralized, that needs to be in the United States. Why was it in California? There's a variety of reasons, but it was possible for businesses to be created. There was workforce available, and there were regulations that allowed that all to occur within the United States. But that's not the way that it has been for the last decade. We have a client who tokenized U.S. treasuries, takes U.S. treasuries, creates tokens so that more people could invest in them. That is exactly the type of business that needs to be in the United States.
Yes.
Over the last few years, they have not been. They had to move outside the U.S. and restricted against U.S. investors because of the regulations. The future of technology of the world is crypto. And this is not just some hyperbolic idea. It's the reality, right? That we've had the internet wave, AI and crypto are the future. And there's a lot of connections between the two as well. But being able to keep crypto and being the dominant player globally in crypto could mean the entire difference between being the United States or being just another country. And so we need to keep it here. We need regulations that allow those businesses to be here, that promote it, tax code that, for instance, allows you benefits, research and development credits, no tax on staking rewards until you sold it, all these different things so that you form your business in the US and that you continue to be successful here.
Yeah, I totally agree. Well said. So, Andrew, we talked about a lot, and it was pretty eye-opening and interesting, especially, I mean, with the senators and them actually going forward. And it makes me quite bullish, and it makes me realize that there's a lot of things still to be done. So when people say, you know, we're not really that early, we're way down the line, I think that people are mistaken. I think that this is ground zero. And I think that there's a long launch pad to go before we get to where we actually want to be. So, Andrew, thanks for your time. Everybody, if you're watching the video right now, there will be links in the description. You can join up and then talk or actually find out more what Andrew's doing as far as for legislation. Also, I'll link the website itself in the description below. Now, Andrew, I'm going to guess that right now you're probably bombarded with different clients, people doing taxes, but I'm sure there's something that you can do for the viewers of the channel.
Yep. Reach out. Happy to speak to anyone out there, have a consultation, talk about your situation. And yeah, we've got a lot of great resources on our website. So check it out.
All right. So everybody, so Andrew, thanks so much for stopping by. I appreciate it. Everybody, links in the description. Thanks for hanging with us. We appreciate it. Like and subscribe, and we will see you guys on the next one.